Belinda. Good morning, everyone that we have here today on the call. Belinda has already introduced me. I'll probably just say a few things about myself in addition to what Belinda has shared. Yes, PwC, Deloitte, Halliburton, and now on the consulting side, a director, an advisory director for Infinity Grade Consulting. Yes, I've done some work with Diamond Consulting Group, but my address is Infinity Grade Consulting. Happy to be here and to share with you. Thank you for inviting me. I am passionate about governance. I love governance, especially around SMEs, because I've worked around SMEs for a while. So I appreciate that. And as we go through the details, the definition of an SME is quite different. But before I get into the details thereof, let me first ask that we have a prayer, and then we'll kick off. The prayer will help to stabilize me and also get us properly going. Father, we thank you for this morning. We thank you for everyone that's on the call. I pray that even as we share, as we go through this, may we all be built up. May we live better than we came. May we have a lovely day, and may we glean insights that will be useful for our businesses and in our operations. In Jesus' name I pray. Amen. Okay. So as I get started, I think let me first share my presentation. Belinda is smiling at me, looking like
We are getting there.
Yeah.
Yes.
Let me share my presentation,
Okay.
and then we'll get started. Okay.
Yeah, we can see the presentation.
Can you see it? Okay, very
Yeah.
good. Very good.
You just need to put it in presentation mode, and then we are good.
No worries. That better?
Yes, that looks so much better.
Okay. So we're talking about governance today, and we're talking about internal controls and how those will help to strengthen our financials and operations as entities. Glad to be here. First of all, let me thank Enterprise Uganda, Ronald Mukasa, for inviting me to share with you. We go back a long way with Ronald as finance professionals and in our circles. So very glad to be here and for the opportunity to share with you on this platform. I'm going to first define what we understand corporate governance to be. Then I'll talk about internal controls, why we need internal controls and why we need governance, and then what that means, and then how to implement it. We talk about governance many times, and whenever we talk about governance, the first thing that people run to is having a board in place and that kind of thing. Now, there's different aspects to it, and for some people it's daunting, but I want us to discuss it in a way that is much easier for us to understand or take in. When we talk about SME, who are the majority of the clients that Enterprise Uganda serves, generally, if you look at the definition, at least according to the IFC, you'd be talking about entities that are employing more than 250 people at the very least. Those are SMEs. And that definition, as I understand, our context in Uganda does not apply because we are much smaller. Our entities, I think SMEs would probably be employing anywhere below 10 people. Yeah, some much more than that. But generally, we're all SMEs, majority or the vast majority of us. So this applies to us as a whole. And so, what's corporate governance? I've tried to define it there. I'm using Sir Adam Cadbury, and it's a system by which companies are directed and controlled. But according to the Corporate Governance Institute of Corporate Governance of Uganda, it is the way in which corporations are directed and held to account. The aspect there that's important is the held to account. While the other person, Sir Adam, calls it control, Institute of Corporate Governance calls it held to account. Now, that accountability aspect is what is quite important for many of our businesses, and it is lacking. And as we go along, we'll see how. Now, if management is about running business, governance is about seeing that these entities are run properly. Now, all companies need governing as well as managing. Yeah. Okay. And then internal controls, policies, processes, and procedures designed to help SMEs manage risk in their operations, reporting, and compliance areas. Controls help to prevent fraud, ensure financial accuracy, and safeguard company assets. The example that I have there for us, is you've gone into a bank, the bank teller is behind the counter. Those are what we'd call physical controls, so that you don't have easy access to cash, even as you sit across, as you stand across from the counter. That is a control. Now, when you get into a building, the search that they will do on you, the security personnel, that is also a form of control. So internal controls really help to safeguard and protect assets of the organization. They prevent fraud and help to ensure accuracy. Remember that at the heart of all these controls is assets of the organization that generate value for the organization. Now, I've also tried to differentiate governance. We have external and internal governance. When we talk about external governance, we're talking about really laws and regulations, the regulatory framework within which an entity operates. And then when we talk about internal governance, we're really talking about those policies and procedures that the organization has put in place to help run the organization. And these internal governance structures at a very basic level, even when you look at your memorandum and articles of association, the very basic board structure that is set up there is an internal governance structure. Very basic, but very helpful in building confidence, especially to the other external stakeholders that you're dealing with as an organization. Now, again, I've quoted the Internal Auditor Magazine, 1977, that controls protect weak people from temptation and strong people from opportunity, and innocent people from suspicion. I'll say that again. Controls protect weak people from temptation, strong people from opportunity, and innocent people from suspicion. As you will notice as we go along, even in our organizations, which many are founder-led, in the absence of controls, it's difficult to protect the organization against the whims and wishes, personal wishes of the founder. Now, putting those in place helps to protect even the owner from the temptation of getting into the resources of the organization and dealing with them as they would. Yeah. Sorry. Okay, I have a case study there that I'm going to read through quickly. Let me know if you're able to see it.
I can see
About
it.
a company called Rockstar. Okay. So, meet Rami Bhagat. Today is the big day. Rami Bhagat, the chief executive officer of Rockstar Clothing Company, dreams of expanding his clothing business from its current 12 stores to 100. Not many of us are there, so ignore it. It's in the context of a US entity, but we go on. And he's about to meet with Sunstone Equity Group to discuss what he sees as a win-win for all parties involved. For 29 years, the company has provided high-quality men's clothing to the Egyptian market with much success. Rockstar has proven itself with great products already tested on the market, but only with a significant investment can the potential for growth be realized. Now, to attract investment, Rami put together his proposal, intending to offer up to 30% of equity in his company to investors. He thought he had done everything necessary to be ready to discuss the product, company strategy, and finances. However, Rami was not prepared for some of these questions. How are key decisions made? Very important in our context. Who are the people with essential knowledge and expertise? And how do you plan succession for these key risk positions? Many of us, for our entities, we've staffed them with our relatives, our people, in total disregard of the competencies that they have that are useful for the organization. We do that. It's a common mistake, not just here in Uganda, but also in the context of the various other markets. But this is important. Knowledge and expertise. Do you know what you're doing? How do you manage risks? How can I see what's happening with the company? How can potential investors be sure the information provided is correct and complete? What relationship do you offer to your shareholders? These are some of the questions the potential investors raised, and they all speak to the issue of governance within Rockstar Clothing Company. These investors wanted to understand how committed the company was to good governance, how decisions were made, and whether there were structures in place for oversight. They were also interested in knowing what kind of controls were in place to protect the company from risks, and whether Rami would be committed to practicing transparency and sharing information with outsiders. Finally, they wanted to understand how they, as external investors, would fit in this close-knit family company. I hope as we go through, that sounds very familiar for many of us. These are key questions that we faced in our businesses severally. And I know that each one of us can identify at one point or another. So in his search for answers, Rami discovered that he did have some of the governance structures, processes, and systems in place. Like most businesses, he was already practicing governance without even knowing it. However, his meeting with investors made him realize that he needed to address governance in a more structured and effective way. With that in mind, Rami is setting out on a journey to assess and improve governance in his company. He is confident that this process will lead the company to perform better, grow, and become more sustainable, and make it more attractive to investors. This case study will help us illustrate key governance challenges for SMEs and potential solutions. Now, from this case study, I know that for many of us, probably we are not looking for an investor or to make our company attractive to an investor to come and buy. For most of us, we're saying, this is my business, I've done it, I want to keep it, I want it within the family. Nobody is going to take it away from me. I'm not sharing in the benefits of this business with anybody. But yes, even then, with that comes sustainability and the ability for the operation to operate as a going concern beyond the owner. Growth becomes a key important aspect for the business and how that growth is going to be managed. Now, all of these things come together, and in coming together, they help us appreciate the importance of governance in relation to internal controls and how they help our businesses to thrive. Okay, so why internal controls? Why should we have them? I've explained to you what governance is. Internal controls is just a subset of governance, yeah? And usually the board management is responsible for setting up internal controls. And the board relies on those internal controls to ensure that an organization is being run soundly. Ultimately, risk management lies with risk management, and internal controls lie with the board, and they're very interested in that particular aspect. So risk management, internal controls help SMEs identify and manage risks. What risks are we talking about? Financial errors, quality, compliance issues, fraud, and many others. Efficiency and growth. Those are key important aspects for any business. I know that for many of our businesses, a lot of them have remained in startup mode for a long time, 5 years, 10 years, still in startup mode. Now, how do we plan for efficiency and growth? What helps us to grow? And so internal controls will help improve operational efficiency and enable businesses to handle cash flow better, improve financial reporting, and also to meet regulatory compliance. The financial reporting aspect, the cash flow management, those are key important aspects. In financial reporting, you're certainly looking at how the business is performing, you're projecting where it needs to go. You're taking actions on the projections that you've made and seeing that you get to that that promised land, so to speak. But what helps you get there? The analysis of those financials to know where exactly you're situated and what you need to do to get to the next place. That's what reporting helps you do. Cash flow management, again, that you don't see the money on the bank account and get excited because there's 200 million on the account. And then you're ordering for all kinds of personal benefits for yourself, as opposed to growing the assets for the organization. Because remember, the assets are the ones that help the organization to grow. And this is another folly that we find many times, or that we fall into, that we, as our businesses start to make money, as they get better, instead of ensuring that the business is strengthened, investment in assets that ensure long-term availability and the ability for the organization to deliver on key promises and ability to innovate, we instead invest this money into buying plots of land, buying buildings in personal names. They're not generating any value for the business. And that's why all these internal controls, that's why they all come together. And as we go in, we'll see why it's important, even as owners, to have other people looking in and helping to direct how we go and move. Fraud prevention. Again, a good internal control system, for example, where you have clear approval limits, where you have proper segregation of duties, that will help to prevent fraud. But again, from experience, segregation of duties in the absence of strong people will collapse, especially where you have people colluding, then it does not matter how good. And that also takes us to the aspect of the people and how values for the organization are very important, but most especially the constant renewal and relooking and reviewing of the internal control systems that an organization has in place, so that it's not a one-off, but it's a constant process. Because as the business environment changes, as technology comes in, as you bring in new products, that also calls for reviewing of the internal controls that you have in place to help the business keep up with the changes in the environment. Okay. Now, again, internal controls, for the most part, difficult to implement for many of us. Why is it difficult? One is overconfidence in personal control, where self-governance is weak, where we believe that as owners, we understand, we know what we're doing. I mean, and I can use myself as an example in my businesses, knowing very well with my background that, you know, PwC, Deloitte, and checking on other people's books, I have a good appreciation of what internal controls are. But sometimes, and many times, we do not get into our businesses and implement these things. Why? We're confident in ourselves. I know these things. I know it, but you never do it. You know it, but you never do it. So there's a discipline also that is required around that. And that's why in ourselves, we are weak. Each one of us, with nobody else looking in, left to your own devices, you will do as you wish. That's why it's difficult. So we keep kicking the can down the road. And also, if the motivation for the business, for setting up the business is wrong, then again, we have a problem there. The other reason for difficulty in implementing controls is resistance to accountability and transparency. The ownership mentality is, this is my thing. Nobody asks me questions. And because nobody asks me questions, I can do whatever I want. Now, to subject oneself to another, to humble oneself, especially when we've tested success, were difficult to talk to. I started with one truck. Now I have 20 trucks. Who are you to tell me what I need to do? You understand? So those are difficult issues that as owners we deal with. Keep smiling to myself, even as I share this, because it's it hits home, not just for you, but for me as well, that we are difficult to talk to. So this lack of perceived accountability can cause us to bypass good governance practices, and the reluctance to share power, where, for example, the founder may be reluctant to share decision-making power or to be challenged by a board, and preferring to control the organization themselves as opposed to having a team of people helping them. That becomes an issue. And we struggle with that as businesses because, for the most part, we're carrying the load on our own. We don't have anybody to talk to. And I know that it's a challenge that we have as entrepreneurs, that for many entrepreneurs, it's a really lonely journey. It is solo. I always say that. But spaces like these, where Enterprise Uganda mobilizes us to come together, share knowledge and experiences, these are good platforms to help us get better, but also to understand that we are not alone in the struggles that we are going through, and that it can be done. We learn from each other. Now, if you've set up a business because you want to be your own boss, because you want to feed your family, because you want to amass personal wealth, that motive is wrong. If the motive is to use your gifts, talents, and resources to create products and services that add value, solve a problem, that's a good motive. Society will pay you for that product or service. And anything outside of that is a wrong motive. Yes, it is tedious, yet it's difficult, it's lengthy, sometimes it's costly, but anything worthwhile is uphill. So nothing is going to come easy. We need to do the work. We need to come together. We need to learn from each other. We need to ask where things are difficult so that we are able to move and get better. Now, I've talked about what internal controls and governance is. I've talked about why internal controls. I've also talked about why internal controls fail. Now, how can we incorporate this into our governance, into our operations? And I'm quoting the SME guide by the IFC, which says that 44% of the institutional investors say that governance-related factors are the key reasons for rejecting investment in small companies. SMEs with strong governance structures are more attractive to investors and banks. Like I said in the beginning, the motivation for many of us is usually not to attract investors. If you attract them, well and good, you're very happy. It's a home run. You're happy you're going to be paid. It's good. But even other people that we want to engage with, in the absence of good governance, and it doesn't matter whether you've just taken the financials to an auditor there to just have a quick opinion signed for you so that you can present them as viable. If you've not embedded and inculcated governance practices in your operations, it's only a matter of time. It's going to fail, okay? It's going to fail. So better for you to set it up in such a way that once you've set up your structures, and you work on those, in the long run, you're going to see that there's sustainable value for the organization. So one of the strategies there is adopting financial oversight practices. Why? Good financial oversight prevents mismanagement and ensures that the company stays financially healthy. How can we do that? One, separate personal and business finances, especially if it's a sole proprietorship. We've since established that this is not easy, especially when the purpose for setting up the business is to feed your family. I have some personal stories that I could have shared there, but you have to decide what role you are going to play in the business. Are you going to be a shareholder? Are you going to be an employee? Or are you going to be both? If you're going to be a shareholder, wait for a dividend. Relax. Wait for a dividend, especially if you can find other means to support you. I know that for most of us, when we set up our businesses, what we're looking at is it able to meet my needs? Is it able to pay school fees for the children? Will it feed my family? Will I buy a house? Will I pay rent? But if that is what you're looking at for the business, then it's very short-sighted. You've set the bar too low for this business. When you're setting the bar should be that it's able to, above and beyond, meet your needs and also meet its growth and profitability perspectives. That's very important. A business that's not growing, it's only a matter of time. It's going to collapse. And so let's separate those. If you but take a salary that there are many times, and I know the struggle there, where you're finding people getting money from the business. For example, my friend is taking their child to an international school. I should do the same. It does not work that way. If the business cannot sustain that pressure, you're going to collapse the business. So let's separate. Let's live within our means as owners. Let's do what's possible. 2, let's use basic accounting to report. Basic tools. You can use Excel if you have the discipline to update. Use that. If you don't, and you can hire someone, you can hire people these days to do your book accounting, no more than 500,000. They'll be able to do it for you on a monthly basis. And you can always negotiate. I'm sure you'll also find probably those that are cheaper, but within that range, you have someone that can look at your accounts, rather your books, depending on the volume of transactions. Another thing that I personally use is if I'm making payments, you can always get a small mobile phone, a capability. It keeps a log of all the payments that you make. So make all your payments through that small capability phone. You will have a proper log of all the payments that you've made, all the vendors you've paid. If you bring in an accountant, just give them the phone and they look through all the transactions and they'll have a record of whatever it is that you've been about. So SMEs that implement formal governance practices experience an average growth of 15 to 20% faster than those without structured governance. Again, I want to say that governance is not a panacea. It does not necessarily, it won't deal with all the problems faced by SMEs, but if you don't have it in place, it will surely ensure that the organization does not stay around for long. 2, risk management and internal control. Why? Risk management helps a small business stay ahead of potential problems and ensures resilience. When we talk about risk management, well, there's all kinds of risks that the organization faces. But at a very basic level, you will have some operational risks, you'll have market risks, you'll have financial risks, compliance risks. In the absence of a proper risk management plan and being deliberate about those, any of those risks can take you out. If you're not looking at the market very well, you're not looking at the competition and the products, you might find that the product that you're trying to sell is becoming obsolete and not required in the market anymore. Those are market risks. You have to deal with them. And that's why usually when you have people from the outside looking in, they bring these perspectives to your business. Now, how can you implement this? Implement basic internal controls like regular audits, even informal ones of financial transactions, inventories, or operational procedures. When you implement these audits, first of all, as the owner, the information that is coming is for your benefit. we have what we call a management letter that comes from an external auditor. The management letter will generally point out the key weaknesses that the external auditor has identified while reviewing your financial systems. And remember, when they're looking at it, they're only focused on the controls that help in the generation of your financial statements. So they don't look out. Now, while you have those ones, also get some internal audits done. These internal audits will basically be looking at the entire operation, and then they'll be able to say, okay, we find weaknesses not just in your financials, but also in your HR, in operational areas. If you're into manufacturing, we see some non-compliance risks. This machine is supposed to do so many hours. It's not being serviced. It will break down at some point. These are all things that are being brought to your attention for you to deal with as a result. Identify key risks and create simple risk management plans that address how to mitigate these risks. Okay. Establish control activities such as approval of expenses and oversight for key decision-making points. And what do I mean when I say that? For the most part, we don't have limits set up. As the owner, you're controlling every aspect of money that is flowing out of the organization or anything related to the organization. Create a structure, put it in place. Allow people to approve small expenses that will not hurt you, so that it also frees up time for you to look at the things that are really important for the organization. So set that up, let that be made clear, so that you can focus on what needs focusing on, while others help you to focus on the other things that also need focusing on. But while they add value, they're not as value adding as the things that you're looking at. For example, not for example, but an instance that a common phrase that we use is, let's look at the forest as the owners, as opposed to looking at the individual trees in the forest. Let someone help you mind the trees while you mind the forest. 3 is let's develop some policies and procedures. Why? Policies and procedures ensure consistency in decision-making. They reduce ambiguity and bring about transparency. So any new person that comes to the organization will know that this is how it is supposed to be done. The difficulty here is the discipline to actually sit down and write the things that need to be done. That's a challenging part. The discipline to write. And then when we write, the discipline to actually implement and say, what does my policy say about this area or the other area, and following through. Now, whenever you have other people, again, looking in, what you do is you're subjecting yourself to transparency and saying this is what, or this is how the organization of the affairs have been managed. This is what needs to be done better. These are the key areas that have been pointed out as our weak points. And then you're challenged on how you're going to address those weak points. What are you going to do about them? So let's draft simple policies. Let's have them in place. Excuse me. One of the examples that I could share with you there, especially when it comes to human resources, it's leave management. As owners, we rarely want to talk about leave. We don't want to give leave to our people, but leave is not a reward. And we need to appreciate that. It has to be taken, it has to be given to the employees. It should not be taken at the pleasure of the boss, but it's a negotiation, it's a basic entitlement. And so in that negotiation, let's see what's the best time to take leave, for example. Might not be during the peak season, December. We're an FMCG. This is the time that when we're pushing sales, and that's when you decide to take leave as an employee or as a business owner. That's probably not the best time to switch off. That's the best time for you to remain very focused on the numbers, because I know that a number of businesses, the last quarter, especially manufacturing, the last quarter is a key one, because December, November, sales. So let's manage that very well. When it comes to staff development and training, let's engage people. When I say have predictable rhythms and patterns of staff development and training, what does that look like? Let's create some training opportunities for our people. It's important. It's expensive, yes. Is it important? Yes. But there are also opportunities for free trainings. For example, we are here now. This has been sponsored by Enterprise Uganda. It's a good platform to also bring your people and say, come and learn. These are some of the things that I'm learning. You need to be in the same spaces that I'm learning from. You have training sponsored by the Stanbic Incubator, by GIZ, and many others. Those are free trainings that you can take advantage of, and they run every year. So let's give the training opportunities to our people so that they can grow and be better. I've talked about drafting policies. I've talked about training, developing basic internal controls, setting approval limits, ensuring dual sign-offs on important financial decisions, or handling petty cash. Let's have the petty cash policy guiding the management of petty cash so that petty cash is not abused. The cashier must have some limits within which to work. Banking money is intact. I think that's a basic that has been shared with all of us separately. Let's establish a clear organizational structure. Why? Even with a small team, it's important that everybody knows which role they are responsible for so that there's no overlap in duties and accountability, so that nobody can kick the can down the road and say, no, it's the other person, or pass it on to the other person, yet it's their responsibility. So making that clear to the employees and to the team that you're working with is important. Even in a family setting, it's very important. Who is doing what? Who is responsible for what? And then let's respect those boundaries once we've set them up. So create job descriptions. That's the how. Let's create job descriptions. Clarify reporting lines. Who makes key decisions and who is responsible for what? Documentation of all this is important. Talking about it is good. Documenting it that everyone can always go back and refer to it is very important. Ensure that ownership, management, and operational roles are well separated, especially in family-run or founder-led businesses. Again, I'll quote Rock, the CEO of Benaventura. He says that, I don't know cases of families that had become more united because of money, but I do know of many cases where families destroyed companies because of money. Yeah. And I know that each one of us has many of such examples that we can relate to. I also know of, I also happen to be a coffee farmer. And so I know of families in Brazil that have had coffee plantations for more than 100 years. It's a family, but the rest of the family members decided that they never wanted to be a part of the day-to-day running of the organization. And so they set up a board, left one member of the family that is interested, and they are wherever they are in different parts of the world, just waiting for their dividend check. But the organization is running and it's going on. And so we have to pick our battles or pick what really interests us and where we add value to the organization so that that's where we apply ourselves. The other area is succession planning. Why succession planning? Because it ensures business continuity, especially in the event of leadership change or if key staff leave the company. Anytime you get into a place, anytime you're working with the people, the idea should be to pour out whatever you have of yourself to the next person or to the next people below you or the line below you, so that people are able to know what it is that needs to be done and how it can be done. By unreservedly doing that and pouring out everything that you know and have on the inside of you, you've just created a line of people that can take over. And these people are going to be trying to prove themselves who does it better. And you'll be able to see while you're there. And then you're able to pass on responsibilities depending on the strengths that you're able to identify from the potential leaders that you're creating right below you. So identify potential leaders and successors. By doing that and giving them everything you know about the business, then you will have set yourself up for the business to continue without you. You'll be able to leave, take your annual leave without worrying that the business is going to collapse, and do whatever else that you can do. So again, talked about training, mentorship, develop basic exit plans for employees that outline how duties will be transferred and who will take over in case someone leaves unexpectedly. That's important. The training, I've talked about it, the other side, again, very important. And even when businesses argue that training is expensive, yes, training is expensive. So you don't train your people. Okay, so you don't train them and they stay. Then what? Better you train them so that they add value to your business. Because if you don't train them and they stay, you're really stuck with poor performers and people that are not adding value to the business. So just see it as a cost of doing business. Plan for it, inculcate it in your financial expenditure. Actually, look at it as an investment. I know that it will come through as a training expenditure in the P&L, but look at it as an investment. That's the best way of looking at it. Succession planning. I've talked about succession planning. Creating an advisory board. Why an advisory board? An advisory board provides an outside perspective on business strategy. I've been talking about this throughout my presentation. And so important to have it. So invite some trusted external professionals, accountants, mentors, investors. Have some people that meet either quarterly or biannually, depending on the size of the organization, to review the business's progress and to offer you guidance. People have a lot of knowledge and skills out there that they're bursting with it. They don't know how to share it. We have so many talented people. You just need to tap into those people and they will help your organization. So look out for those. And don't just get your friends. Please get a board that you're able to respect. People that will tell you don't do it and you respect what they have said to you. People that say, I will not come if you don't do this, and then you run and do it. The challenge is getting in people that we think, oh, these are my friends, these are my friends. Yes, there's a good balance there, but be very careful that you only have people that are going to add value to operations, know the kind of business that you're doing and the risks that are faced by the organization. Okay. Compliance. Why compliance? Following legal requirements is essential to avoid fines and ensure that your business operates ethically and responsibly. Belinda, first help me. How much time do I have left? I've been told 40 minutes.
Okay, you have 8 minutes for your presentation, and then we'll have 30 minutes for questions and answers.
For the Q&A.
Yes.
Great. So, compliance, very important aspect. Following legal requirements is essential. You avoid fines, you avoid penalties, and you avoid being taken out. Ensure that the business is registered with relevant authorities and complies with local labor laws. That is a very important aspect of governance. I alluded to it when I was starting my presentation, and it comes here again as a separate. Legal compliance is very important. If the business is hinged on a strategy of evading taxes or being non-tax compliant, non-compliant to tax, that's not a strategy for a business that is going to be sustainable. If you're thinking that as a trader, I'm going to be putting in these, bringing in these goods and evading tax here and there, that's not a strategy for a sustainable business. So anything that you're trying to do as a business, tax compliance is a key part of it, or regulatory compliance is a key part of it, because in one move, your business can be taken out. and then you would have nothing to operate. So ensure that the business is registered and complies. Keep up with any industry-specific regulations and certifications that might apply to your business. How do you do that? By being a member of the different entities that govern a particular industry. For example, if you're in mining, you have the Uganda Chamber of Mines and Petroleum. If you're a SACCO, you have, I think, UKUSCO, which is the body that brings together SACCOs. If you're a tobacco grower or a coffee grower, we have different coffee platforms where this knowledge around coffee is shared. So know the industry that you're playing in. If you're an exporter, what are the rules for exporting? How do I ensure I comply? 3 is consider having a legal advisor, either on retainer or through a network, to assist with contracts, employee issues, and compliance. We take legal advice for granted until the very last point when we really, really need it. Let's not be reactive. Let's take it up front. It will help our businesses. Then let's develop an ethical code of conduct. Again, that tells us how we should behave and what we should do and not do. Very important for the culture of the organization. And I always say that culture is not what we write on paper, and values is not what we write. It's how we behave. The example that I always use is if you find a lady that is kneeling and serving her husband, most likely, without telling you, that lady might be a Muganda lady. If you find that if you find people behaving differently, that tells you the culture that you have come into. And so we have to recognize the impact that the culture has on the organization and why setting a good culture for the organization and good values is important. And that starts with us as the owners of the businesses, because the way they see us behave, especially when it comes to the way that we handle the assets of the organization, the resources, the finances of the organization, that becomes important. If they are always seeing you getting into the petty cash box and saying, please release 100K for my lunch, and that's where you're picking your lunch money from, or please lend me some money for my fuel, nothing is going to stop them from doing the same. They'll also borrow from that petty cash box. So let's be very careful around that. So let's develop simple codes of conduct that outline expectations, behavior, conflict of interest, and anti-corruption measures. Make sure all employees understand the importance of integrity. That's important. Incorporate basic anti-fraud controls like separation of duties in financial management or inventory oversight. Encourage open communication and feedback, very important as well. And this will probably be my last one. In opening communications and helping information to come through, you help to identify risks early, and you foster a collaborative workplace culture where the team feels heard and they feel valued. So let's do that. Let's hold regular team meetings. If you're within the oil and gas industry, they have what they call toolbox meetings. Now, toolbox meetings are team meetings within small departments talking about the work that they do, how it needs to be done, the issues that are coming up, and the challenges that need to be addressed, such that the feedback mechanism is fluid. This is what we're going to do. If we're going to attain this, what support do I need? Let's encourage that kind of a culture so that then we're able to get the results that we're looking to get. I want to thank you. I think I'll leave it at this point. Thank you for listening to me. Let me take any questions and comments at this point.
Great. Thank you so much, Mr. Sekyeru. Yes, you are the right person to come through for this for the end of the year, to basically remind us there's so many things that we have discussed this year. We've talked about preparing our businesses for investment. We've talked about succession. We have talked about internal controls. I tell you, after hosting this business recovery series, you would almost think that I'm an accounting professional. So we have had this discussions this year, and you've done a very good job of reminding us of what we need to do, especially as the year is coming to an end. I want to thank you so much for sharing your knowledge. Now we're going to get into the questions and answers, but before we do that, and while you are still here, allow me to engage you on two very important aspects. And
Yes.
I would like us to be as realistic as we can. Let us come down from PwC and go down to my friend Mr. Akampoya Martin in Bushenyi, in Kiruhura, who is who sells honey. So,
Yes.
Mr. Sekyeru, let us agree that most of us start our businesses for survival.
Yes.
To put food on the table, to take kids to school, to pay the rent. I'm telling you, that is the reason people start businesses. It is not a good motive. I'm not trying to differentiate between motive and reason, but if you talk to most of the businesses online today, they start businesses for survival. In fact, we call it a side hustle. Okay? Now, the person starting this side hustle is probably in employment and the money they have is not enough. We know how people in employment are. Their discipline, their interaction with money is you get your money as a salary and you spend it. There's really no lesson on separation. Okay. Now, looking at the reason that we start businesses, and then the most important internal control of separation of businesses, business money and personal money. I would like us to openly advise the entrepreneurs on the call. We start out the wrong way, but how can we work towards the separation? Okay, how can we work towards the separation? For me, I think I tell people, you mixing up your money is expected, but let us work towards the separation. So are you able to guide us? Let's guide my friend Martin, for example, in Kiruhura. How do I work towards the separation of my personal money from the business money?
Thank you, Belinda. And I appreciate the question, especially because I am in that boat as well. So whatever I'm sharing with you, I'm not sharing things that are outlandish. The PwC things are at a different level, but in our context, there's a way to do it. One is, for the most part, we're living beyond our means. We're living beyond our means. You want to, for example, your friend Martin in Chiruhura, he has done well by Chiruhura standards. He's, he has some money coming in. He's able to do a few things. And then he wants to afford a very expensive lifestyle. You need to hunker down. That's not the opportunity to do that. And you need to look at the business realistically. When the businesses that we're talking about, many of these will write in their notebooks. I've sold so much today, I've made this, I've bought this. They have their records in their very basic form. And that is a very good thing, that at the very basic level, they are writing down. But how do we do it? One, cut down. It's not any different from a big company, but now to a smaller company, you also can cut down on your costs. If you've been eating meat every so often, this is, maybe we shall do some beans today. And remember that it's a journey. It's not a one-off. It's a journey that you're on for a long while. So let us draw from the business as we see it progressing and gaining capacity. Let's not from the get-go try to draw. No, let's take it in small bits, small, tiny bits gradually. We're looking at the growth that the business is experiencing. And as we track the growth, we know what it can support and what it cannot support. To thine own self, be true. You're the one that's owning the business. Look at it, appraise it on its merits. Can it take your hit or not? If it cannot, don't straddle it with a burden. Two is, again, as you look to grow this business, if there's opportunity for another hustle that can also bring and supplement income, let us bring that hustle on board to help you. Now, there are people that have left employment to go start their businesses, but the businesses are fledgling. They're not doing well. You can still go back and get a job so that the job can be for your day-to-day living as you try to get the business to stand on its own and to be able to pay you the salary that you're earning from employment. Let's do the maths well. For the most part, we are prospecting. But if there's an opportunity to go and get another opportunity to earn some money, let's take all the opportunities that we can take on. And then it will get us there. The other thing is to save. Basic principles. Saving. Put money aside, save. There are disciplines within which you can bucket your incomes and say that if I have, say, 1 million shillings, how do I break it down to be able to help me live sustainably? And then you say, maybe I'll be able to afford my rent. Currently, if it's 40% of my 1 million, maybe it's too much. I also have transport needs. So we have to cap the rent and say we'll take rent maximum 30%. And we know that that is allocated rent. And then as the income grows, that's not, again, the opportunity to say, that let us raise our living standards. No, let's first hunker down first and see that wherever it is that the business is going is sustainable for us to stay there. It's difficult to bring your lifestyle to this level and then adjust it back downwards. So better to go slowly on lifestyle adjustments, even as the business continues to show great potential and growth. That's the discipline. And then again, when you talk about bringing it home, Martin in Chiruhura can get their friend Belinda and say, Belinda, on my own, I can't do it. I don't even have the money to pay you. But you mean well, you know my journey. Why don't we do a peer-to-peer? I look in, you look into mine. I look in, you look into mine, so that we help each other. We're both on the same journey, we're struggling. And because we have this community created by Enterprise Uganda, it's a good community for us to look into and then say, okay, what skill sets do we need? Who can help us with this? And we get the help that we need. So there are practical ways of doing it. Even in pulling together, you can still do a group. For example, I could do group coaching. And I take on, say, 5 SMEs. You all come at the same time. You sit in the same room with your financials. We discuss when everybody's listening to the other. You, why did you perform this? Why did you do this? Ask those questions. Everybody picks the lessons and the learnings, and we move. So I hope that helps, Belinda.
Yes, it does. What I have picked from your response is that, one, we need to keep our standard of living modest. And ask a follow-up question to that. It is really keeping our standard of living modest, but then also utilizing the sense of community that we have of, asking someone to, to work with you, to guide you, so to speak. We had a session this year where most of the entrepreneurs expressed concern that consultancy services are expensive. Most small businesses cannot afford an accountant to come to hire an accountant on full-time basis. And we all agreed that these are resources that can be shared. 5 people can hire one accountant, and this accountant can visit them once a week. you know. So we appreciate all those lessons. But now to get to the deeper issue, Mr. It's the issue of discipline. And Martin has mentioned it. You also mentioned it in your presentation. Without
Right.
being so technical as a finance professional, how? Okay, there's how to develop. I don't even know how to ask this question. Tell us why discipline is so important. And those who are struggling with discipline, maybe you may have to present it in another way. Or what are the benefits of discipline? I think people need to see the benefits so that they can go back and do the things that you are telling us, because they all they all depend on how disciplined you are. Even you asking your friend to come and look into your business, it's a thing of I need to be disciplined. I can't do it on my own. Let me ask someone. So what is underneath that drive for discipline that all entrepreneurs need to embrace to make sure that these big things, internal controls, all rest on discipline? So let's talk about discipline. The way us Ugandans do our things, yeah? Let's talk about discipline and how we can nurture it, especially for our businesses.
Thank you, Belinda. That's
I have you today.
when you talk about discipline, that's the thing that everybody wants to crack. It's at the core of almost everything that we do if we really want to succeed, because it speaks to self-mastery. And that's quite a journey. We never really truly arrive. But and I don't have a silver bullet for it, but I'm going to attempt so that anybody else also can give it a shot. The one thing that I like to do is put myself, or that I've embarked on over the past couple of years, is a journey of being continuously in growth spaces or learning spaces. Today, you'll come and hear something. Say today, you leave the call, you feel really charged. I'm going to do this, I'm going to do the other. I'm going to do this, I'm going to do the other. But you need to hear this a couple of more times in order for it to crystallize and land. As listening to some speaker that said that you need to hear something 7 times, 7 different ways in order for it to crystallize. Now, this being in constant spaces where you're listening and hearing and learning and listening and hearing and learning, it's small incremental steps. If the mind starts to move slowly by slowly, there are those shifts that are happening. They're not very visible because it's not like today I have a bungalow, then tomorrow I have a storied house. No. But there's small incremental developments happening internally on the inside of the leader or the owner of the organization that slowly by slowly will then start to manifest physically through their actions. But you need to be in those spaces where you're learning and being encouraged constantly to do the things that you're challenged to do in order for you to get there. To run away from or to fear because you're challenged in a particular area is to keep yourself within that particular same area. And I'll share with you one of the things that I decided I was not going to do. And that was, I'd left employment, I think that was around 2015, 16. When I left employment, being out of employment, all this time you're running your own businesses, doing your own things, but not being in growth spaces and interacting with other entrepreneurs. At a certain point, I felt overwhelmed. You're trying this, you're trying the other. You're trying this, you're trying the other. You're partnering with different people, but not necessarily sharing, especially the things that are hurting your business. And you're not inviting other people in. Now, just keeping to myself alone, that was enough to just box me into a particular corner and feel absolutely overwhelmed and feeling like I have nowhere to start. But again, being in growth spaces and continuously, deliberately challenging yourself to get there, to say, I'll sign up for this training, to say, I'll get onto this webinar. There's a Zoom call by Enterprise, I'll be there. You'll keep hearing these messages. And most of the time, we're talking about the same things over and over again, or very relatedly. And eventually we get there. That's how I would go about it. It's not an easy one. It's a journey and it's slow. It's 7 Habits, Stephen Covey. Internal victories before public victories. So once we conquer internally and overcome, then public, it becomes easy to implement some of these things. Thank you. I think you have over to you.
Yes. So now for me, I think what you have said about discipline is so important. And for any information we are going to receive as far as our businesses is concerned for 2024, 2025, we require a lot of discipline. And I like the fact that you've said we need to put ourselves in growth spaces. Yeah, so thank you very much for that. So
No problem.
It's 10:15. We have about 15 minutes to go. I have asked my questions to Mr. Sekyeru, so I'm opening up the floor for you guys to ask your questions as well. We have good feedback in the chat. Let's see what Brian Enyimo has to say. Brian, I am getting to you, and I would like you to switch on your mic and ask your question. Hello, Brian, can you? I'm asking you to unmute. Okay, Brian? Okay. Having a problem unmuting mic. Let's try Dr. James Senoga. Okay. Dr. James Senoga, please ask your question. Hello, Dr. James. Or you've muted again. Okay, I don't know what happened. Dr. James Senoga?
Yes,
Your mic
I can
is
hear
on.
you.
You can ask.
Hello, can you hear me now?
Yes, Dr. James Senoga, please ask your question.
Yes, thank you so much for this great session. My name is Dr. James Senoga. I'm a consultant radiologist. I run a private radio diagnostic unit, private. But as I was listening in, I was really appreciative of the presentation, and I was saying that probably before, like when I went to practice medicine, I had this course. It would be a good thing that before one goes into business, which we always go into without any knowledge, this knowledge is quite important. You will be flying blind, especially for some of us with a medical background. So I really very appreciative of this. But one thing I've found so challenging that he has been mentioning is letting in people in one's business. It could come as professionals or boards of directors. Twice I have lost my precious idea by letting in people. So I wanted just to come in on that and say, how do I get in people to look into my business and advise and without stealing my idea? Thank you very much. I hope I'm clear.
Okay, thank you, Dr. Senoga. Those who are at the Global Entrepreneurship Week, you remember Dr. Senoga, he was there with his wife. Okay, we will get to answer his question shortly. I want to try Brian Enyimo again. Brian Enyimo, I'm trying. Okay, Brian, there you go. Hello, Brian.
Hi, good morning.
Good morning. Ask your question, please.
I have a bit of concern that I'd want to straighten some bends in.
Yes.
One is to maybe try and share my mind on how best we can avoid encroaching on our business monies. I borrowed a tip that has worked, Grace Munyera, and I later realized that if I'm going to be self-employed, then I also need to pay myself, allocate myself a bit of money from my business, just as I'm paying other people who are working for me. Equally pay myself so that I avoid picking monies, coffers, to help me fund my daily basic needs. Yes, we cannot do without those essentials, like paying for kids' fees, rent, and stuff. But if you're working too and you're paying yourself, it equally helps you, let the business grow at the same time growing. But then also delayed gratification is equally a point of discipline. And I believe in one more day principle. If I look at a very beautiful suit, yes, I'll give it one more day. If tomorrow I need that suit, then I can go ahead and I get it. But believe me, by the time you wake up the next day, you realize you don't need that suit and you can move on. But also it's important to consider the principle that if you cannot buy an item more than 3 times, then know that you're not able to afford it and let it go. Thank you so much. That's it from me.
Thank you, Brian, for sharing that insight. So, so I think he was just sharing something with us. Let's first answer Dr. Senoga's question, and then we'll take our last question for the day from Mr. Moses Muzugule. So, Mr. Sekyeru.
Thank you.
Letting people into your business.
Yes.
How does that happen?
Before I answer Dr. Senoga's question, Belinda, this thing that you touched about discipline. I just want to dovetail back to it a little bit and really compare it to a person going to the gym and trying to build muscles. Now, all the while when we start, I want a 6-pack, I want these biceps to look really nice, well outlined. It doesn't show on the outside for a while that the work is going in, but it is going in. And so I would compare discipline to a muscle that has to be exercised and built slowly by slowly. And so that's where we have to start. And you have to stay the course. If you're saying, I'm not going to take sugar, some of those simple things, by the way, they seem like simple wins or victories, but they are also setting you up for the other things, the bigger things where you have weaknesses that you want to set yourself up for. So let's start with those small things. Let's start to build the muscle slowly by slowly. If the mind is defeated, the body will be defeated, and so will the organization. So let's build the mind slowly and get to it. Now, to Dr. Senoga's question, how do I get people into my business without them stealing my ideas? That's a good question, but it's not, and I'll say that it's a challenge to find good people that can be trustworthy. But we also have certain groupings where we have people that can be sourced that have good value systems that we can rely on. So it's going to be through a proper vetting process of trying to understand what's the value add that this person is going to bring to the business. How are they going to help me? I know that some organizations will put safeguards, for example, NDAs, and will put those in place that you cannot engage or discuss or participate in anything that competes with this organization in a particular way, especially when you have such proprietary knowledge that you want to keep. So I would say that you would have to put some safeguards around that. But then again, the people selection and how you arrive at the people that you have arrived at, what's the process that has led to the selection of these people? We have to look at the process and see what could be the flaws. What lessons have you picked from how you've selected those people and how you've ended up or where you've ended up, and try to align those. Could there be something that we could have done better in the selection process so that it brings out the kind of people, caliber of people whose values are really crisp and we can rely on? Because at the core of it is the value system. If the value system is flawed, especially for people that we're selecting to be on our boards, then there's no telling how professional it is that they're going to be or how they're going to behave when they come into such sensitive information of the organization. So the selection criteria, I think, is going to be key. Again, I'm happy to also have other people supplement. I know that Belinda, you're a director also for different entities. You could also add to it. And I know for sure there's some rogue board members that some organizations have had. So it's not exclusive to you, Dr. James. There are also other organizations that have suffered the same, with board members going and sharing very sensitive information with the competition. Again, the people, so it's not, that challenge is not exclusive to you. It's for many organizations, but it should not dissuade you from attracting other people, especially when you look at the process and you think it can be improved to bring in some good people. Back and over to you, Belinda.
Yes, I hear you on the idea of the theft of the idea. And I also see, when someone comes into your business, they get to know beyond the optics. Okay, so Dr. Senoga has a radiography center. There are so many radiography centers in town, but there's something very special that makes Dr. Senoga unique. All right, there's something very special that he has done, something that he has learned. It's like a secret formula. So when you let this person in and they get to know your secret formula and share it, that's where the problem is. And I'm sitting here and asking myself, how do you even safeguard yourself against that? How? Because you cannot know what is going to happen. Okay?
Yeah.
So I don't have a response for that. It is unfortunate, but one thing I have always known that if the idea is yours, you have what it takes to make it work. People who only copy what they can't see. They can't see everything, okay? They will copy the idea, but they will not copy the person. There is more where those ideas come from. If they copy something, you will be able to come up with something better. That is what comforts me. I have a brand on the market that has been infringed on so many times, but then I go to the point of realizing that there is more where that brand came from. Okay, and eventually it's the delayed gratification, the discipline you talked about, these softer values that really keep you going, that keep you going. But otherwise, these things do happen. So I hope we've been able to address doctor's concern. It's 3 minutes to the end of this discussion. Brian, your hand is up. I don't know if there's something else that is very urgent that you want to say, or we lost our other. Okay, Brian, let's see if this works. I'm trying to get your mic to unmute, but okay, there you go, Brian, very quickly in 30 seconds.
One quick one I'd forgotten. I don't know whether the moderator, the presenter could help us make choices between partnerships and having people on board as shareholders. I don't know which one would work better for a business, and then bring out the best in people. Thank you.
Okay, Mr. Sekyeru, did you get that?
Having partnerships in lieu of having a board. I think we would be mixing up things if we did it that way. A partnership, you're looking at what value is the partner bringing on board? How are they complementing your already existing services or product? And what does the business stand to benefit or gain from it? Sometimes it might not work that way. Whereas when we talk about a board, on the other hand, we're talking about a governance structure that is about how the organization will be managed and control ideas, risk management. Those are two very distinct and different things. So, Belinda, I'm not sure that I can add much value to that question in the way that it's presented, especially considering the time that we have. But I see that addresses totally different challenges. Even a partnership can have a board. So that's different. But then again, just to touch a little bit again about to what Dr. Senoga has said. I think as we go along, even in selecting the board and people that we want on the board, very important to understand what value do I need on my board? What value am I looking to bring to my board? So that you try and minimize some of those things or some of the people that might indeed come in and all they want to do is take your proprietary knowledge and use it. Yeah. Thank you very much, Belinda. Back to you.
So, I would like you to give us your parting shots, and probably you'll offer some free consultancies to people here as a Christmas gift. Yes, your parting shot.
My parting shots will be, let's hang on a second, would be in my conclusion that corporate governance doesn't have to be complex for small businesses. It can be scaled to fit the company's size and needs. Many people have run away from it thinking it's so complicated. You don't need to have a board that Stanbic Bank has. No, you're not there. But you can have people that come and talk to you and help you to organize your business. And you can formalize and document those meetings whenever you have them. And you can present them as evidence to whoever. As long as you're taking action on the advice that you're getting, you're helping your business. So by implementing simple, practical governance practices, even a small business with a handful of people can benefit from improved accountability, risk management, and overall operational efficiency. I would have loved to make an offer for free consultancy services, but I can do that probably, again, through Enterprise Uganda, and I would prefer that I'm doing a group, but not an individual. Yes. Thank you very much.
We really appreciate that, and it is good to know that you are able to help entrepreneurs find their fit. I've seen some of the comments here. They say you're very good at presenting your information, and I want to thank you so much for sharing your knowledge with us this morning. And I wish you a Merry Christmas.
A Merry Christmas and a Happy New Year to you too.
And a happy 2025 to you.
And to everyone on the call.
So much for joining us today. What a conversation. I think the biggest takeout for me is the power of mastering discipline. That's very critical. And I mean, if we're able to master internal struggles and delayed gratification and basically be disciplined at things, we'll be able to pick up all these, I call them growth ideas for our businesses. They all are built on a bed of discipline. Discipline is very, very important. Thank you so much for spending your time with us this morning. We've come to the end of the Business Recovery Series with Enterprise Uganda. Today is the 12th of December, 2024. It is 3 days for you to file your returns. Make sure you do that. And I know also the year is coming to an end. URA will be knocking at your door for your income tax and all the taxes that are due on the 31st of December. So let's plan well so we can have a great break. We'll be here next week to close off the year. So make sure that you look out for that. And until then, have a great Thursday. Bye-bye and see you next time.